Reserve Chairman Ben Bernanke has soothed fears the Fed will halt quantitative easing anytime soon. In a speech to the Senate Banking Committee in Washington yesterday, Mr. Bernanke signalled the Fed will continue to buy bonds at its current pace as the positives outweigh the negatives, quashing many fears from other members of the Federal Open Market Committee who suggested a prolonged period of low interest rates could damage fiscal stability and want to reduce bond buying, which is currently running at $85 billion a month. Bernanke said he takes these current risks very seriously, whilst dismissing these concerns, saying inflation will now stay at or below the Fed's goal. He stated, "We do not see the potential costs of the increased risk-taking in some financial markets as outweighing the benefits of promoting a stronger economic recovery." On the subject of inflation, Bernanke said the Fed is trying to fulfill its congressional mandate for steady prices and wasn't about to take a gamble. Mr. Bernanke said the bond buying is helping the economy by holding down long-term interest rates that ought to be sustained. However, the chairman was less positive on the job market, describing it as being generally weak. He said, "Unemployment remains the key challenge to the economy. The national jobless rate remains at 7.9%. Mr. Bernanke was optimistic on the US's expanding economy, but suggested the automatic spending cuts that are scheduled to go ahead at the end of the week would not be positive for the economy and would reduce potential economic growth by 0.6%. He asked Congress and the Obama administration to instead replace the sharp, front-loaded spending cuts with a deficit reduction for a longer-term solution. Senior economist at RDQ Economics, Conrad de Quadras, supported Bernanke's decision and said the current pace of QE will most likely continue into the second half of this year. He stated, "Bernanke's view and the view of the majority of the committee is that the Fed is doing the right thing. There is no hint here of tapering back on the asset purchases." That's all from me. There will be another press review tomorrow with my colleague Monica Gibson. Be sure to tune in.